All right. Well, we are trying this darn thing for the third time. I apologize for everybody that showed up at 7:30 and then got booted. Technology happens, but hey, let's get into it. Let's just get going. It is Fed Day. There's universal expectations that the Fed will cut today and deliver a hawkish message. What does that mean? Well, I would ask you to simply go back and look at the last Fed meeting. In the last Fed meeting, they delivered a quarter point cut. Then Jerome Powell stepped in front of the microphone and basically said, don't expect another one. So what might we get today? Probably something very similar, where the Fed delivers the cut and then says something like, we will be pausing or assessing or words like that for a while. Basically saying we are going to pause. We are not in a rush. We're watching inflation. They're going to deliver messages like that. Also, I think it is very interesting that we are going to get the dot plot. The dot plot will be very telling. Really, what do they expect in 26 and what do they expect in 27? I will mostly be keen on 2026. Most importantly for me will be the labor market. We have heard from 5 doves who believe the labor market is falling apart and they would like a cut. And many of them want a series of cuts. So, I believe the last dot plot pegged the unemployment rate at 4.4. We're there. Some would argue we're higher. How high does the unemployment rate get in 2026? Does any of the Fed presidents see 5%? That would be quite a move. An unemployment rate going from 4.5% to 5% would make you pucker up. That would get your attention. So do any of the Fed presidents see the labor market that bad? Second, the next one will be GDP. How do they forecast GDP in 2026? Do they see a tailwind from perhaps the big beautiful bill, i.e. income tax refunds larger than normal? Do they see investments in manufacturing starting to pay off in Q4? What does GDP look like in 2026? And third, of course, will be interest rates. How many cuts? Are they front-loaded? Are they delayed? Whatnot. It is my strong suspicion that we're going to see an average of cuts in 2026, probably between 2 and 3. There will undoubtedly be a couple of Fed presidents that say 0 or 1. We have to remember we have a divided Fed. 2 weeks ago, might have been 2 weeks ago, may have been 3. I think it was 2 weeks ago. I did a deep analysis over the weekend and found that there were 5 hawks, meaning no cut, and 5 doves, and 2 undecided. Now, these are the 12 voting members. I did not look at the 6 non-voting members. So what are we going to get in this dot plot? That is where my focus will be. Then it will be Jerome Powell in front of the microphone. He has been ultra hawkish the last several times. I expect him to be hawkish again. My hope is some news reporter asks him about the delayed information. I still stand by my statement that I think it is malpractice that the Fed met this week. The Fed should have delayed a week. We are getting critical labor and inflation data next week. The government shutdown basically meant the Fed learned nothing the last 6 weeks. And they, in my opinion, are performing malpractice, making an important decision with incomplete information. But again, we will learn at 11 o'clock and go forward from there. Who is saying hawkish cut? Well, nearly everybody. First off, we'll go to Jeremy Siegel, said expect hawkish cut. I want to be clear. I think mortgage rates could go up at the end of the day. Right? Again, we've seen this the last 4 or 5 times the Fed cuts and mortgage rates go up. I don't know why it wouldn't be any different today. JP Morgan says expect hawkish cut and pegs the dot plot at 3.4 for 26 and 3.1 in 27. That's basically 1 cut in 26. I'll take the under. I think you're going to get at least 2 or 3 cuts as an average because, again, we have 5 doves. Morgan Stanley, taking the opposite side of JP Morgan, says the Fed will cut in December, January, and April. and to expect several dissents. I think that's another important topic. I'm going to guess today we get 3 dissents. I do think there was a point in time where we could have gotten 5, but I do think the labor data is sufficiently bad. ADP negative 32, things of that nature. Unemployment, layoffs at 1.1 million. My guess is we get 2 or 3 dissents, but it will be interesting to look at that. Goldman Sachs says, yes, December cut and 2 more in 2026. One of the things I do think we need to watch out for is who the next Fed chair is going to be. I think it is very clear that President Trump wants Hassett to be the next Fed chair. I expect the bond market to revolt. I expect the bond vigilantes to say no, thank you. I think everybody looks at Hassett as a Trump puppet, which he is. Hassett has said things like, and I quote, plenty of room for Fed to cut. I believe Hassett said a month ago or maybe 6 weeks ago that he thinks the neutral rate might be as low as 1%. Most people today peg the neutral rate somewhere between 2.5 and 3.5. I think it's 3-ish. But yeah, to say that the neutral rate is below 1, that is quite a reach. But hey, that might get you the job, right? If you whisper in President Trump's ear what he wants to hear, he might give you the job. But hear me now, the bond market will not like it. The Fed does not control the long end. Be careful what you wish for. Yes, the Fed could take rates to 1%, and the long end could go up dramatically. This is not a game. This is potentially a disaster waiting to happen. The one thing I am looking at today, and I don't know that many people are talking about this, is will the Fed increase mortgage bond purchases, aka QE? As we know, or you should remember, they ended QT, quantitative tightening, on December 1st, which means they are now buying roughly $25 billion just to stay flat or stay even. But will they double that to $50 billion? Will they go to $100 billion? If they do, welcome to Money Printer 2.0. It is here. So again, very, very interesting. If the Fed boosts if the Fed boosts Treasury buying, the money printer is on. My fear is Hassett gets nominated and confirmed, and then he starts buying mortgage-backed securities. If you want to see asset prices go nuts, grow the Fed balance sheet by buying mortgage-backed securities. Why? Well, folks, if you look at the data, 32% of mortgages, 32, let's call it a third. We'll round up slightly. A third of mortgages are between 3 and 4%. Why? Because the Fed drove rates down by buying mortgage-backed securities. In fact, according to Realtor.com, not only are a third of mortgages between 3 and 4%, but 80% of mortgages are below 6. And we should never forget that roughly 40% of homes are owned free and clear. Never forget that. We got some data about home prices falling. Folks, the crash is here. We've got Miami down 1.2%, Dallas down 1.3%, Phoenix down a total crash level of 2%, and Tampa coming in at 4% decline. This is all according to Case Shiller. We did get the U.S. leading economic indicators, and they are still falling. These are very recession level. In fact, really the only thing that's holding up the leading indicators is the stock market, which many people think is in a bubble. But again, there is this thing called wealth effect. So the top 10, the top 20% who own assets are feeling good, where everybody else is not. This is really pointing at a slow and frankly unbalanced 2026, where the economy slows because the optimism between households and businesses decline. I will take exception to that. I think people are going to be shocked in Q1 when they see their tax refunds. Again, folks, I don't know if you know this, but I think it's like 40% of Americans pay zero tax at the end of the day. We're going to see people flush in Q1, right? Tax refunds are going to be bigger than normal. In fact, there's many reports that say it will be a record The average American will see a $4,000 tax refund, which is up from the previous year of $3,000. That is going to be money that circulates in the system. Consumers will not save that. They will not pay down debt. They will do what they always do and spend, spend, spend. I do want to thank Anthony. Anthony joined our school community yesterday. Thank you, Anthony. Make sure you introduce yourself, find your accountability group, take all the free education. Again, folks, join school, get around 500 other wealth builders, go in the same direction. You will enjoy it. The one thing, I got a quote from Nick Saban. Nick Saban, legendary Alabama coach. He said in a, I guess, a short that I saw, outcomes are a distraction. Focus on the process. And the reason I brought that quote up to you is I get asked all the time, especially at the end of the year, Michael, my goal was to buy a rental. My goal was to buy 2 rentals. My goal was XYZ. And folks, that's the outcome. Don't get distracted by the outcome. If you do, you will make shortcuts. You won't learn. You'll do a bad deal. It's not what I want for you. You need to focus on the process. What is the process? The process is get a buy box. The process is look at the buy box every day. The process is look at it every day for 90 days so you can learn what an average deal is. Then, and only then, do you start writing good or great offers. You are gambling if you write an offer before you know average. And we don't gamble at one rental at a time. We make strategic bets. We do our homework. We discipline. We network. We write disrespectful offers. We get mortgage rate buy downs. We follow up. And then maybe we get a deal. So as Nick Saban said, and I will steal, outcomes are the distraction. Focus on the process. That is what I wish for all of you. If we were having a hallway or an elevator conversation, I would simply ask you, what is your buy box? And you would say, boom, 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 boom. And then I would say, what's an average deal? Only if you can tell me that my average deal is 3.5%, -2, 9, whatever it is. I'm not going to judge you. I don't care. I don't know your area. Then and only then do we write disrespectful offers. So again, one more time. Outcomes are a distraction. Focus on the process. If you look at the 10-year note this morning, it is at a 3-month high. I think the bond market again is saying we are going to get a hawkish cut. Silver jumped over $61 an ounce. Crazy. And then President Trump, and again, this is something that I think is very dangerous. President Trump demands the next Fed chair cut rates as a requirement for the job. Couple of thoughts on this. First and foremost, there are 12 voting members. Even if the Fed president comes in and demands, scolds, berates, makes fun of, clowns, the other 11 voting members, doesn't mean squat. They don't have to vote that way. However, historically, the Fed president has gotten a lot of grace. They are the kind of, they are the lead. But we have a divided Fed. So there is no guarantee that the puppet will be able to get something done. And I warn you one more time, a Fed president that is looked down by the bond market is very dangerous. You want to get the Fed rate to 1%, but the 10-year bond goes to 7%, that could happen. And if the bond market takes the 10-year to 7%, where do you think mortgage rates go? 9, 9.5, 10? It's possible, folks. We do not want to lose the independence of the Fed. That is very dangerous. And I would warn you to be careful what you wish for. Alrighty, folks, that's what I got for you today. It is Fed Day. Oh, one more thing. I almost forgot. Mortgage applications. Purchase applications down 2% week on week, but still up 32% year on year. That's crazy. Up 32% at the end of, or in December. We're not even in November anymore. We're in December. Hello. Refis up 14% and 88% year on year. FHA refis up 24% and FHA purchases up 5%. Folks, the demand is building. I told you this was coming. I told you the August was the bottom. It's going to be very interesting to see what happens next year. I know there are people calling for a crash in Q1. Don't believe them. The data is just not there. Delinquencies are down. Demand is up. And that is not the supply-demand dynamics that lead to a crash. But hey, we've been right for years. They've been wrong for years. Why would anything change today? Take care, everyone. Have a great day. Don't forget, if you are a landlord, Steadily, once again, saved me $1,100. We just got the final quote on one of my houses. And after some tweaking of the deductibles and whatnot, we got a savings of 11. That's almost $100 a month. Shout out Steadily. Link in the description. It doesn't always work. Sometimes it does. Sometimes it doesn't. But this time, big savings. Big savings. Thanks, Steadily. You are much appreciated. Thank you. Take care. Have a great day.